If you're an active trader looking to increase the amount of money you trade with, I have urgent news. You can get $5,000 or more for your trading account. The hardest task an active trader has is to manage cash flow. Without using every technique available to earn a profit, you can quickly run out of funds to trade with. That's why Traders Accounting put together an eye-opening, easy-to-understand, 11-part video series about the business of trading. These videos cover what every successful trader needs to know, such as what business a serious trader like you needs, the best way to set up your trading business, wash sales and capital loss restrictions, business expenses you may not have thought of deducting, what mark-to-market is, and efficiently trading your own retirement money. These free videos show you how to get an IRS subsidy of $5,000 or more every year just by trading. It's easy to get our free videos too. It's quick, easy, and safe, and there's no cost or obligation. Thank you, and we'll see you on the next page.
During the next few minutes, we'd like to introduce you to exchange-traded funds, or ETFs. Since 1993, ETFs have become increasingly popular among investors and traders because they can be used to build a diversified portfolio and can be traded like a stock. We'll explain why you might want to consider adding them into your trading and investing portfolio.
Let's start by explaining what ETFs are. ETFs combine some of the best features of both mutual funds and stocks. Like a mutual fund, an ETF includes a basket of stocks that can be purchased through a single investment. Mutual fund investors purchase shares in the fund, and the fund managers are responsible for buying and selling the individual securities within the fund. While you get to choose the mutual fund in which you would like to buy shares, the managers make the investment decisions for the fund.
Most ETFs seek to track a benchmark index and trade on exchanges in shares like a stock. Most mutual funds can only be bought or sold once a day directly through the fund company or through your brokerage account. An ETF, however, trades throughout the day just like a stock. If you want to buy or sell an ETF anytime during the trading day, you can place an order to buy or sell an ETF like a stock at any time. An ETF is like a mutual fund in the sense that it has a specific investment objective.
An index ETF would have a similar objective, to stay as close to the index as possible. ETFs are available for every major asset class like stocks, bonds, and cash, and for different indices, styles, industries, sectors, and other classes like gold, oil, commodities, and international markets.
So why not just buy mutual funds if they're so similar to ETFs? Well, let's look at some reasons why ETFs may make sense for investors and traders. First, ETFs generally have lower operating costs than most mutual funds, as they're designed to track a major index or industry where there are few changes. This is not always the case, however, so you should always carefully check the fees before you buy.
As we've already mentioned, an ETF can be traded throughout the day. That may provide an advantage over mutual funds, especially if the market's very volatile. Having the ability to buy and sell ETFs at any time throughout the trading day may help to manage risk.
Don't underestimate how important that last point is. Managing risk is crucial for investors and traders alike. Since ETFs trade like stocks, you can also use stop orders for ETFs. These orders allow you to specify a price at which you want to sell your ETF if the price should drop. If the ETF price drops to your predetermined price level, the stop order automatically turns into a market sell order, and you exit your position.
We've talked about some of the ways ETFs compare to mutual funds. Let's look at a few characteristics of ETFs compared to stocks. As we've already pointed out, many ETFs are essentially baskets of stocks or other securities. So certain categories of ETFs have built-in diversification. When you purchase a single stock, your risk is concentrated in a single company. If bad news comes out on that company, your stock can take a big hit. If an ETF includes 10 stocks in equal amounts, then any single company would only have a 10% impact on the ETF.
Finding ETFs can be a fairly simple process. The ETF screener at eTrade.com allows you to evaluate ETFs that meet your investment objectives by selecting from a menu of search criteria. You can also choose from a broad range of fundamental and technical criteria, such as dividend yield, regional exposure, and uptrends or downtrends.
You can also narrow your choices to ETFs in a specific sector or industry. A single application of the ETF screener will help you select ETFs from the over 1,000 choices in the market today.
Before we conclude, let's look at some of the things to consider when you're choosing an ETF. You can start by reviewing the strategy or investment objective of the ETF. Some ETFs are designed to follow an index as closely as possible.
Take the time to see what's inside an ETF. Some ETFs may be overweighted in a single industry or stock. If that's the case, you may not have as much diversification as you thought. If you're not clear about the objective of the ETF, you may get a better understanding by looking at the types of securities held by the ETF.
You should also guard against collecting too many ETFs. Just like mutual funds, different ETFs may hold the same stocks. If you buy too many ETFs, it's possible you could find yourself with less diversification than you thought. Or worse yet, you may have two ETFs that are basically acting against each other.
As with mutual funds, review the ETF fees. In addition to the ETF expense, you'll also pay a commission when you buy or sell the ETF, just as you would with a stock trade. And finally, be sure to review the ETF price chart. Charts are important tools for managing risk, and knowing the basics may help you decide which ETF to buy or sell and when to trade.
Take the time to find out if ETFs fit into your portfolio. Learn more about smart investing with E-Trade's free trading tools, webinars, videos, platform demos, and live events. Thank you for joining us.